what happens normally is around the Bitcoin halving or around the early part of crypto summer. Now, we're not talking about summer as in actual seasons. We're talking the 4 seasons, which correspond to each year. The early part of the year usually is something called the boring zone. So it starts strong and then sideways corrects after the halving for an extended period of time, and then eventually begins to break out.
Bitcoin Zella stands out with its simplicity and clarity. We've crafted an experience that anyone can dive into, whether you're a crypto expert or just a new to the crypto world. Now guess who keeps his eye on us? The author of best-selling book Rich Dad Poor Dad, Robert Kiyosaki. And we want to take this opportunity and thank all the people who trusted us, and we read every comment. And the best part, it's free. Subscribing now means you will get all new information for free. Don't just follow the trends, stay ahead of them. Subscribe to Bitcoin Zella today and enjoy the new edge. The clock is ticking. Raoul Pal reveals how AI will transform the global economy and why crypto might be your best chance of survival. Bitcoin, Ethereum, Solana, Tether, Solana, Dogecoin. Which do you invest in?
The breakout usually ushers in the banana zone. So we've had the boring period. It was about 8 months long. It was a nice, orderly correction. So what lies ahead? The banana zone. The fabled favorite yellow fruit of all of us. The one where our hopes and dreams are all in it. Let's talk bananas. So when we look at halvings, from the halving, you can see what happens until the end of that year. So we had 2020 at the top, was very strong. We had another strong year in 2016, and 2024, we're a bit below par right now. But don't worry about that, because you'll see it in context of everything else. We should still see extremely strong price rises. The US election, well, that's a key time for this, because after the election, we get the banana zone. There's often liquidity being injected into the system, and there's also a shared sense of optimism that drives prices higher. We are just starting that now. At the time of recording, the election was 2 days ago, and already crypto prices have started their explosion into the banana zone. Bollinger Bands are a measure of volatility or lack of volatility, because Bitcoin was ultra low volatility recently. And that's really interesting, because every time you get there, when you get these kind of low volatilities, you tend to get large price rises. And we've been following that kind of price action. So you tend to get 200, 300, 400% rises over the course of 6 to 12 months. So that, I think, is another interesting signal. So suppressed volatility usually leads to hyper volatility. Also, Solana exhibiting extremely low volatility. That box in the right, it shows you that every time we've got to these levels, we've seen everything from a 25% rise to a 520% rise in 2 to 3 months. This is bananas. Now, looking forwards, the business cycle is starting to pick up. So current ISM today is very lackluster. It's almost recessionary conditions, which is why many of you think we're in a recession right now. The forward-looking indicators are exploding higher, meaning we're all going to have some more money soon because the economy is going to be working better, our businesses will run better, our earnings will go up, and we'll feel a bit better about ourselves. That's what lies ahead and is at the essence of what matters in the banana zone. Now, when we measure altcoin season by using this 30-day outperformance, underperformance of Bitcoin, we're nowhere. We're still at 39%. That's mid-cycle range. We've got a long way to go. And that's when things get very excited. It tends to be the last 12 months of the 4-year season, that 4-year period. Those last 12 months are where all the returns come, and they lie ahead.
These came in a fashion similar to the previous day, with a sudden push during the Wall Street trading session seeing new all-time highs of just below $77,000 on Bitstamp. The volatility came as the United States Federal Reserve lowered interest rates by an expected 0.25%. After the latest Federal Open Market Committee, FOMC, meeting, Fed Chair Jerome Powell said risk factors impacting its dual inflation and employment mandate were roughly in balance. Recent indicators suggest that economic activity has continued to expand at a solid pace. Since earlier in the year, labor market conditions have generally eased, and the unemployment rate has moved up but remains low, he said in prepared remarks. Inflation has made progress toward the committee's 2% objective, but remains somewhat elevated. Markets were in agreement over the Fed's course of action. On November 8, per data from CME Group's FedWatch tool, consensus favored a further 0.25% cut at the next FOMC meeting in mid-December. Trading resource, the Kobayashi letter, said that the Fed's pivot on interest rates could still be at risk if longer-term inflation trends were to pick up. Ultimately, we expect to follow long-term inflation expectations, which have not ticked higher yet. It wrote in a dedicated thread on X. However, if these do begin rising, as they now stand at 2.1%, we believe the Fed pivot would be at risk. This is a big if, but anything is possible as we head into 2025. Bitcoin showed little sign of concern over macroeconomic minutiae, as it set a new all-time high and its highest ever daily close. BTC was up 8% month-to-date at the time of writing, with Q4 gains sitting at 19.6%, as calculated by monitoring resource CoinGlass. CoinGlass data also revealed liquidity building heavily on either side of the spot price on exchange order books. High-leverage liquidity, the platform responded on its X account, suggesting that not trading would be the best strategy in the current climate. Expecting a little pump before this overheated market makes a correction, trading account Cryptomutant predicted amid discussing the liquidity shifts. In case of correction, the 72,600 level must hold to keep the sentiments positive.
Also, total liquidity is breaking out. We see these wedge patterns every time around the same time in the cycle, and then what happens is as soon as it breaks out, Bitcoin breaks out too. We're breaking out now. China is leading it. China's injected $8 trillion of liquidity so far since, I think, October, November 2022. Europeans about $1 trillion, the UK about $1 trillion. The US has actually been about flat, but we expect them to start injecting money soon via the Treasury General account. Okay, Global M2, it's a measure of private money. It leads by 11 weeks, Bitcoin. Perfect. And Bitcoin, banana zone. We keep going. So that looks great. Now, don't get fixated exactly it's going to be 100,000, but it seems in that kind of range. Basically, a strong end to the year and should get even stronger into next year. GMI total liquidity, another fantastic correlation, same kind of outcomes. Strong Bitcoin into the end of the year, and that's what we're looking for here. Ignore the corrective price action right now on that chart because it hooks up afterwards. So we should just continue over time higher. Okay. Are we anywhere near the cycle top? I know people fret, oh my God, but Bitcoin's at all-time high. Surely I'm going to be buying the top. Surely Raoul's shilling things at the top and he's trying to find exit liquidity and all the nonsense that people talk about online. Basically, our cycle liquidity indicator is nowhere near where it's going to go. Also, look at the acceleration that happens before it peaks out. We haven't done anything yet. This has been super mild. So expect the acceleration ahead. If we look at prior cycles, we're kind of nowhere in the current cycle. We're nowhere. We've still got the exciting part where prices go vertical, lying ahead. It's the light blue line here that's a little bit hidden. But really what we're doing is we're more closely following, let's say, the 2015-18 cycle, which I think is how it plays out this time, as opposed to the stunted cycle of 2020. But that remains to be seen.
The world's largest asset manager, BlackRock, accumulated more than $1 billion of inflows to its Bitcoin exchange-traded fund across a record trading day as Bitcoin continued to break all-time highs. On November 7, BlackRock's spot Bitcoin ETF clocked $1.1 billion in inflows, reclaiming inflow status after 2 consecutive days of outflows totaling $113.3 million, according to Farside data. It came on a day when Bitcoin again hit all-time highs, reaching $76,943, according to CoinMarketCap data. IBI's inflows represented almost 82% of inflows generated by the 11 United States-listed spot Bitcoin ETF on the day, which amounted to $1.34 billion in total. The Fidelity Wise Origin Bitcoin Fund saw the second highest inflows at $190.9 million, followed by the ARK21 shares Bitcoin ETF with $17.6 million. Several traders anticipate that there would be more significant inflows in the days to come. Expect another massive day tomorrow. Crypto trader The Bitcoin Therapist pulled their 141,400x followers. Financial analyst Rajat Soni shared the news with his 100,400x followers, declaring they should buckle up. Welcome to Pumpember, crypto commentator Zia Olhak added. Bloomberg ETF analyst Eric Balchunas said he was surprised by the size of the inflows, despite expecting a big number based on the previous day's trading volume. Told Owl it was probably gonna be big, although even I am surprised it's that big. By far biggest one-day flow of any BTC ETF ever. Balchunas wrote in a November 7x post. On November 6, Balchunas pointed out that the IBIT Bitcoin ETF saw nearly $1.1 billion in trading volume in the first 20 minutes after the market opened after Donald Trump prevailed in the presidential election. And do not forget to subscribe to Bitcoin Zella. The most important news will reach your inbox on a daily basis and for free. I do not know why you have not subscribed yet. If you like the video, give it a thumbs up and subscribe for more daily updates. Remember, knowledge is power, and we're here to empower you on your financial journey. Until next time, happy investing.